Welcome to CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. Global shipping giant Maersk has seen shares move higher since reporting earnings last week. As part of that report, they guided for global container shipping to grow by 4% in 2025. The big question now for many investors, how will the Trump tariff policies impact global trade? Joining me now to discuss this and much more, Maersk U.S. President Charles Vandersteen. Charles, thanks for joining us.
Thanks for having me, Frank. Great to be on.
It's great to have you. So today we could see reciprocal tariffs on imports into the U.S. on any country that puts tariffs on U.S. goods. What could that mean for U.S. trade, specifically imports into the U.S.? You obviously have so many customers that bring goods into the U.S.
Yes, Frank, the question actually comes up, of course, over the last few weeks quite often. The U.S. stands as the world's largest logistics market. The strength of the U.S. economy and goods consumptions are important drivers underneath. And U.S. consumers continue to lead global consumption, with goods up growing 3.5% in Q4 and non-imports up by 14%. So we believe that the U.S. administration has no interest in disrupting that growth. And we fundamentally believe that trade is for the greater good, and also believe that the current administration sees it exactly the same. So while we see a lot of ongoing activity in the world of trade talks, we believe it's too soon to fully determine what is tactics and negotiations, and what will ultimately stick. And in the meantime, we continue to work very closely with our customers to make sure that we help them build resilience in their supply chain, no matter what the ultimate outcomes are.
Well, you say you're talking to your customers about these potential tariffs, and while you're optimistic that it sounds like you think these are negotiating tactics, not necessarily something designed to hamper global trade, your customers must be at least planning for these tariffs and responding to them. Before the tariffs were instituted, we saw some front loading, some goods being brought into the U.S. ahead of the tariffs. What are you hearing from your customers, and what patterns are you seeing now?
We've seen, and this is, Frank, not something that is truly recent, because we can see a dynamic that started all the way back in 2016. A Reuters study back in 2022 indicated that already roughly 2/3 of the global retailers, of which of course the US owns a very large share, has started to shift their sourcing from their traditional origins, and of course China was a very large component of it, to alternative locations. And we see today, and we hear today when we speak with our customers, that overall trend continues, which if you just look at the underlying dynamics of just the last 2 years, Southeast Asia, South Asia, so India, including also to the southern borders of the US, Mexico, have taken on a significant part of that shift in sourcing. And we believe, again, regardless of what will come out of the tariff talks, that trend, that underlying trend of the last 8 years, will effectively continue.
When you say that trend, you mean companies moving their production outside of China? And when you say they're moving outside of China, are they moving to other parts of Asia? Are they reshoring here in the U.S.? Are they moving to Mexico or maybe even Canada? I know as part of your job, you oversee container shipping for both the U.S., Mexico, and Canada.
Yeah, Frank, it's actually a mix of all of the above. It is indeed moving away from this dominant share, this large share that almost every single retailer, every single customer, regardless of the industry, has had based in China, to alternative locations, which could include Southeast Asia. It could include South Asia, so India, Pakistan, and Bangladesh, but it does also include Mexico, and in some cases even Canada. So when we say the underlying trend of the last 7 years is undeniable, what we see is that sourcing does shift. It shifts not with big jumps year on year, but it does shift gradually. And we do believe that also in 2025, either compounded by some of the tariff talks or just because of the underlying nature of the trend, that will continue.
So I appreciate that longer term view, but I do want to ask you, since January the 20th, when the new administration went to the White House, what are your customers telling you about their concerns about, or if they do have concerns, what are they saying to you about tariffs, global trade, and what they're expecting?
Their concerns are similar to the ones that you and I just spoke about, in the sense that they also don't fully yet understand whether or not the talks are tactics and negotiations, or the talks are final we've of course seen that tariffs were announced for Mexico, for Canada. They were then adjusted, stopped, or temporarily paused. So the largest concern our customers have is to try and read the future, if you will, together with us and determine what all of the different announcements that we've seen in the short term will effectively stick, and how do we now make sure we navigate our supply chain to respond to this. The good news is, and just the good news is that our customers have, of course, over the last years during the pandemic, been forced to build significant resilience, including the ability to shift origins. And that has enabled most of them to also now be ready for that change.
You also just mentioned India and some production shifting to India. Today, obviously, the Indian Prime Minister is meeting with the President. If there is some type of additional tariffs put on India, does that change that shift to production in India in a meaningful way? What are your customers telling you about that?
At this stage, too early to call, Frank, I would say. Tariffs, of course, can have a slightly different effect depending on the actual origin, simply because different origins will, in most of the cases, manufacture different goods. It's clear that our customers are looking with a keen eye to what will happen today, are looking with a keen eye as to what will happen in terms of the commodities for which a tariff might be relevant and what that means to their supply chain in terms of, again, potentially resilience, and them looking for an alternative route for some of those goods.
All right, Charles Vandersteen, really appreciate your time, your insight when it comes to tariffs and global shipping. Hope to talk to you again. Thank you very much, and thank everybody watching for watching CNBC.com. I'm Frank Holland, the anchor of Worldwide Exchange.